Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that we're now in August, and there are only 100 working days until Christmas, and less than 70 until our 2026 general election. You will need to pull your finger out to ensure your 2026 goals are on track to be accomplished. This week, we'll see the release of a number of updates on how the July real estate market performed, and more importantly, we'll get the June labour market update, and that is expected to show rising joblessness. To be fair, labour market data are lagging indicators though. In Australia, Cotality and Domain will report what they saw in their residential real estate markets, and we will get both household spending and cost of living updates for June this week from them, neither expected to show improvements though. We should also note that their fuel excise tax suspension ended last night. From July to June, the discount was 32 Australian cents a litre. From June and July, it was 16 cents, and now there is no relief discount from here. Globally, it'll be all about July PMIs, other than keeping an eye on the warmongers who will show a distinct lack of any idea how to end the conflicts they started. In the US, the other important data will be their end-of-week labour market updates in their non-farm payrolls report. There is little evidence to suggest it'll be a strong one, and markets currently expect another month of less than 100,000 gain, actually 91,000 is their estimate, and a rising jobless rate to 4.3%. We will be tracking their bond market signals close too. And that the Trump Organization is regarded by banks as a money laundering entity barely raises an eyebrow these days, and it indicates how low the US has fallen. But also a key background reason risk premiums are rising. In India, they will get a central bank review, but no change to their policy rate of 5.25% is expected. And we'll be tracking those PMIs too, especially in China, to see if the private S&P global versions continue to be more upbeat than the Dow official versions. After 4 months of minor expansion, these official factory PMIs slipped back into a small contraction, with a much sharper shift than was expected. After 2 months of minor expansion, their official services PMI also slipped back into a contraction, also a sharper shift lower than expected. And China's overall growth targets are looking less likely to be achieved the longer the year goes on. But let's not overstate these pullback signals. Most countries would love to have their growth levels, even at the reduced impetus. China's key issue is that new order levels are fading, and exports are the key driver, not internal consumption, which is their goal. So more induced infrastructure stimulus is on the way. And Korean industrial production bounced back sharply in June after the minor but unexpected dip in May. The June level was 5.8% higher than a year ago, up 2.3% from May, a heartening rebound for them. And the Korean stock market bounced back sharply on Friday after earlier dives, but they still ended the week down more than 3%. And Japanese industrial production recorded a similar recovery in June, up 4.2% from a year ago, up 1.3% for the month. But that was not matched by retail sales in Japan, which took a rather large tumble, down 4.1% from the strong year-ago level, up 0.5% from May. The Japanese central bank intervention support for their currency may have been significantly expensive, even if it has succeeded in halting the devaluation with a 3% recovery. Reports indicate they spent $45 billion on the few days' effort. It happened again on Friday, this time in a joint action with the US, and more may be coming. EU inflation came in at 2.9% in July as expected, up marginally from June's 2.8%. And Australian producer prices rose 3.6% in June from a year ago, the most since early 2025 and above the anticipated 2.5% and even the high first quarter 3% level. Inflation is embedding, and it is a result that will focus attention by officials. In the US, even though the US Fed held its policy rate unchanged last week, despite 3 dissenters wanting higher rates, markets have pushed US benchmark rates higher anyway. The US Treasury 10-year yield is 27 basis points higher at the end of July than at the beginning. Their 30-year benchmark is also 27 basis points higher. Most of these increases came in the past 2 weeks and will resonate soon for American home loan borrowers. Updated July University of Michigan sentiment surveys confirmed its better July levels and confirmed lower inflation expectations. Still, these new levels are 11% lower than year-ago levels, with perceptions of current conditions 19% lower. These measures are still in the downtrend that started in 2024, even after these better July results. They noted that US consumers remain focused on pocketbook issues like purchasing power, while political and military developments remain more in the background. Also improving in July were the results of the Chicago PMIs, still clearly benefiting from stockpiling and reshoring. In the current second quarter earnings season reporting, 86% of S&P 500 companies have reported a positive EPS surprise, and 77% of S&P 500 companies have reported a positive revenue surprise. In Canada, they reported their GDP rose modestly in June, a third consecutive rise and the fifth gain in 6 months as their economy gathers steam. Second quarter 2026 results aren't available, but it is clear they will be quite positive, in contrast to the small dip in the first quarter and the weak second quarter 2025 result. The US Treasury 10-year yield is now just on 4.75%, up 1 basis point from this time Saturday, up 7 basis points for the week. We make that its highest since January 25 briefly, and prior to that, October 2023. The 30-year yield was at 5.28% and a 20-year high. The price of gold has fallen to $4,042 an ounce, down $8 from Saturday, down $6 for the week. Silver's down 50 cents at just over $57.50 an ounce, down $1 for the week. And oil prices a little changed from Saturday, still just on $84.50 a barrel in the US, while international Brent price is just over $88 a barrel. And the Kiwi dollar is unchanged from Saturday at just on 58.9 US cents, but that's up 100 basis points for the week and back to early June levels. Against the Aussie, we're up 10 basis points at 83.8 Australian cents. Against the euro, we're unchanged at 51.1 euro cents. That all means our trade weight index starts today at 62.6, which is also unchanged from this time Saturday, and also up 100 basis points for the week. And the Bitcoin price starts today at $63,293 and up 0.4% from this time Saturday, but down 1.4% for the week. Volatility over the past 24 hours has been modest, at just on plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.